Hey, what's up, guys? It's Ted here with some bodies and wigs. Hold on one second. Just hold on tight. All right, there we go. Anyways, today we are still continuing the quick technical analysis series. And today we're going to be, well, at least for this one, we're going to be focusing on Decentraland, or also known as Mana. I was an early adopter of Mana when it was around, well, I wouldn't say early adopter, but when it was around 20 cents. I jumped in, put quite a bit in. Whenever it got up to $1, I decided to take 25% and leave it in Mana. I took the other, I think I put 35% in Ethereum and then 30% in, no, it was 30% in Ethereum, 30% in Bitcoin. I think I left myself 5% that I took home as a way of paying myself, because of course we're not, I mean, I would love these things to grow forever, but you know, sometimes you got to pay yourself. And even though it wasn't that much, it was still enough for me to be like, all right, cool, I made some money on this one. That's a different change. No, I'm kidding. But yeah, anyways, we're going to look at this from a smart money perspective. What that means is that basically think outside the box. Don't think as a retail trader, right? Everything that smart money consists of comes from an algorithm. So everything that you see on the chart is an algorithm. It's not buying and selling pressure. It's none of those things, because if you trade and you look at, you know, how many people are weighing in versus how many people are, you know, weighing in as buying versus how many people are selling, and you'll still notice that it could be overwhelmingly selling, but it would still be buying at certain points, and you're like, how does that happen? Well, it's because, again, everything's ran off an algorithm. Smart money believes that price is basically out there for the action to do two things. One, to find and seek liquidity, and two, is to balance itself, and that's it. So as long as I can seek the liquidity that's looking for, flood the market with orders, that is how the smart money investors actually retrieve your money, because they know you're going to do something that's going to be more like retail oriented, when smart money basically does the opposite. Of course they do let, you know, retail traders win a couple times, or else they wouldn't, you know, keep trading. You know, it's kind of like the whole Jordan Peterson big rat, little rat kind of thing, to where you know, they did this discovery that you know, they put two rats in a cage, and the little rat has to win, you know, like, well, they'll play battle or whatever, and the little rat will have to win at least 30 times, or 30% of the time, for it to keep playing. Otherwise it just doesn't want to play with a big rat. So it's kind of like that thing, you know what I'm saying? All right, anyway, we should just get into the chart, shall we? All right, let me make sure I got everything going here, and I do. All right, here we go. Oh, first, yeah, well, anyways, we're going to get into this part. This is the very end of it. We're looking at a 4-hour chart here. And here is the very end. But I don't want to give too many spoils away, so what we're going to do is we're going to go out to the monthly as we usually do, and then we'll work our way in to where we were. So I'm going to go ahead and take myself out of this picture, and we'll discuss, or I'll show, I guess. I found something. I'm not for sure how old Manland is. Manland, Decentraland. This one is Binance, calculated by TradingView. Which shows 2017. Yeah, actually, whenever I found some things, I showed that this Decentraland had been around since just 2017. Actually, one of the logos on my thumbnail art is one of the 2017 logos. So as you can see, very early on we had some spikes, but for the most part it laid flat in between 4 and 10 cents, maybe, if that. I think 11 was about the highest before it stopped being kind of erratic in 2018, which was when the bull market fell. So it came in time just before the bull market and probably fell just right at that time. And it didn't really make a comeback since, up until recently. And somebody was telling me, hey, Decentraland's at 20 cents. It's moving up kind of quick. You should probably jump in. So I did. I jumped in right around 20. It was almost it was exactly like 20 cents. I think the thing is what they had it for on Coinbase. So I threw quite a bit in, and I reap what I sowed, and I'm happy about the decision that it made. But right now, what we're going to take a look at is the monthly fair value gap. All right, so as you can see here, from the end of this wick to the end of this tail, you do have a large area to where the fair value gap is. As you can see, even though there was a big drop back in May, it did push itself out of that fair value gap. Now here in June, we're already pushing our way down in. As you can see, I have a lot of stuff marked out that we're going to be talking about as we go through. So let's go on to the weekly. I think there's only one thing I drew for the weekly, which is this guy right here, which is inside the monthly. And as you can see, it also, whenever it drops down, it pierces the weekly. So the weekly's balanced. The weekly's fair value gap has been balanced now. But for some reason, it didn't want to just pop out all the way of the fair value gap. It stayed inside of it, which is kind of odd. So instead, I didn't want to hit that button. Instead of looking at it weekly, let's go ahead and look at the daily. All right, looking at the daily here, that's the end of it. This is like more focused on what was going on at the highs that we had at the time, or we do have at the time. Got up to $1.68, I said, whenever I started taking my profits was about $1.20. And I've had it 20 cents, so I had 5x'd it by that point. 6x it? Yeah, 6x. And like I said, 30% still went to Decentraland, another 30 to Bitcoin, and then I split another 30 to Ethereum. Was left me with 10%, so I paid myself 10% of everything that I gained. So and I'm waiting for the right time to jump in again, which should be real soon. That's why I'm up this late. That's why I'm actually doing this video, is because I wanted to do one on the Decentraland, and I also wanted to figure out when to jump in again. So now, if we go from the daily to the 4 hour, this is where a lot of my analysis is done, especially through here. I was wondering why there were specific areas to where it would stop and turn around, and I had kind of digging close to them, but I would find, a bullish shorter block like right through here. And of course it would dip down, hit it, rejected. Well, I'm back up. See this liquidity, I can probably pull down lower for the top of that, but that's probably going to be as high as it'll go. Just below that, there's another bullish shorter block. So bullish shorter block just has to be, in this instance, a bearish candle that is basically taken over by a bullish candle, or I guess you could say engulfing, but it doesn't always have to be engulfing, because it could be split up into two candles that aren't engulfing it in each of the candles, but if both of the candles are put together, they would be engulfing it. So it just depends on how you look at it, but yeah, these are both bearish order, like bullish order blocks. And as you can see with each of them, there's a very nice reaction back the other way. And each of the times they do not get lower than this one doesn't get even halfway through the bearish order block. And I think the same with this one, probably does get a little bit more than halfway through the body, is what I'm talking about, of the order block. And then, of course, there was this one here, which had basically two candles to be the order block. So it had the long down one, then it had the little short one. Considering the short one would still fit inside, the larger one, the top candle here would still be considered the order block. So I drew that straight across, and again, same thing, pop back. It gave us a really good reaction, but then started falling again. So I started looking for reasons as to why it was falling. Here was just a fair value gap that was left open just a little bit, and it barely, prodded into it before it just fell, and then came back up, fell again, and then popped back out, and then it fell, and then I didn't see anything much on that. But there was then at this point sell side liquidity. So this would be areas to where people would think would be safe buy areas, and or they would want to have sell stops sitting right around those areas, trying to catch a breakout to the south, hoping that it would retest or at the same line and then get rejected. So, two different kinds of people sitting around this area with market orders, and it goes for both of them. So, it probably went through and take out, some, depends on how short they had their stop loss. Probably could have taken out many people, considering many people don't want to lose money. They want to have the highest risk to reward, things like that. So those kind of things can kind of defeat the purpose. If you're, trading something like this and you see that there is a sell side liquidity just below that, or just near that, to where it's probably going to go through, and then just hammer it out, and then eventually it just falls right through, and it gives it one candle to bounce to this fair value gap, bounce back up, and then came right through it again. So as you can see, it was searching. It was searching for lower prices. That's what I was getting at. So since it was searching for lower prices, it did get all the way through to the weekly fair value gap. So it pops back out, comes back in again, almost fills the weekly, and then pops back out again. But every time it's come back in, it's almost respected it, and eventually pops back out. Except for this most recent time where you can see it go in, comes up, goes back inside, and we haven't left the inside. One of those reasons may have to do with mitigation. So if you look at this, we have a low, a high, and then an immediate lower, or higher low. So that would make your top green candle a mitigation candle. Let me kind of illustrate that for you. Okay, so there we go. And as you can see, it did try to come back into that area, got rejected. So now this is acting as a resistance. And here is another breaker. So now you have a low, high, lower, low. So this candle here is now your breaker. So you have a breaker that's sitting just below, right there, sitting just below the mitigation. Let me turn this dial a little bit so it's not just the same as everything else. There we go. So, and as you can see, after this one comes up, it respects this level almost to a T. So if we look at this, and we look at the low of this is 87317,165. The high of this, oh no, I don't think I did the right thing with that. Low, sorry, 88794815. The high is 89032,693. So this did come into it just a little bit before exiting out, and then consolidating, and then boom, two big move down. So what did that big move down do? Well, that's what we're looking at now. Created a 4-hour breaker, which I just didn't mean to move back. All right, so did that. It looks like when it came down, it see, I'm not for sure if there's even an order block over here. Unless this, red doji is just kind of a green doji, or possibly could be a green doji. Then that would make this whole entire series of candles going down being being order blocks. Sorry, I'm losing my train of thought because I'm looking over a different way. So these could be order blocks. If we look at them like this. If I could click on the right thing and just hold it there for a second. Yeah, just turn off the magnet. Might be the best decision. So all of this from here to here is all order block. So it can come into it. The best thing is that it doesn't get below 50%, and it doesn't. And I don't think it does until, well, I don't even know if this is still 50%. Usually what I'll do is I'll take a look at the volume, the bodies of the candles. Okay, so it has cracked 50% of the volume, the candles. But not by much. I'm considering this line here that I have is halfway point between the fair value gap all right, so now we've got all that. I'll probably come over here and take a closer look at this area here, which I can probably now drop down to the hour. Yeah, there was a 4-hour fair value gap. You can see it just came down and touched it. No, it didn't really touch anything. It just, there was something there that it touched. And look looks like it just so happens to be this order block right here. All right, I'm trying to get this done as soon as possible, and this thing is not helping me. So I'm losing the cursor everywhere I go. Come on. There we go. All right. So make this green, text green. Let's just make sure. All right, so as you can see, you have these two consecutive candles here, getting overtaken by 3 consecutive candles, which should make this an order block. It comes down, and that's why it hits this area and respects it. Why does it stop here for this? Well, my only guess is because of a breaker. Again, and trying to introduce new things. So you have a low, high, and a lower low. So the highest of that high moving across. It looks like it took some time, but it finally did break through it. But then hits fair value gap. I think it's fair value gap, or is that mitigation? No, low, high, lower, low. No, that's another breaker. So we have 2 breakers stuck in between each other. So that's why this didn't know what to do at that point. Finally hits this breaker and jumps down, hits this breaker, and falls through this one until finally coming back up and then coming back down again. So like I said, the algorithm always remembers these areas, these lines, even though something already may have been there, cut it off, or bounced it out, or something like that. The algorithm always knows these key levels that have happened. So just in case you wanted to know. Now you pull it all the way this way, and well, of course it got through it, but got rejected at the order block there. Comes down through this order block, hits this fair value gap, and again, kind of streaks underneath the order block here, falls. Now, since then, if you want to take a look at this again, we have another. There's a 4-hour fair value gap right here. And the funny thing is, this is right as it was going through, or this was passing through the fair value gap. It also creates a little bit larger sized 15-minute breaker. So if we go down to the 15-minute, oh, not the 30. I don't think the 5 will do either. 15-minute. Now I can really start jumping into this. So here it is. So here it is, creating the 15-minute breaker. Right above it, another breaker. So that would be your last up candle, because you have a low, a high, and eventually a lower low, which are all seeking liquidity, by the way. So it may look like this was a good buy. They're both at good buying levels, but that's why you don't listen to dumb money or retail trading, because as soon as you start buying, this thing comes up and comes right back down. This one falls a little bit, comes up, same thing. Now we're accumulating in this zone. And actually, I can probably pull these over. Alright. I was trying to look at something. Alright, so you can see that there is a lot of equal lines of liquidity here. After this fair value gap has been made. Now this one has been made. You have another low, high, low situation, which would mean that there is a breaker in there, a 5-minute breaker, goes all the way across. Of course, it comes up, gets into it, rejected immediately, creates a 15-minute breaker and a 5-minute breaker in the same one, stacked on top of each other. At the bottom heel, no, not the bottom heel, but the bottom of here, I couldn't tell if this was going to be a breaker or a mitigation block. I couldn't tell which one is higher. I'm sure it's actually this one because it fills in this entire gap. So, but now that we got this breaker in here, it's going to be hard to push through. So, I've given my halfway of the order block area, which is right here. And I think this is what just needs to do is fall back, hit halfway through, and just watch it rise. So I do have some buy limits set right around in here, around 61 cents. Just to jump back in again. And hopefully ride it to 250 or something before we see something negative happen. But we do have a lot of breakers and fair value gaps and mitigation blocks to get through. But these are all tiny right through here compared to the amount of liquidity that's probably sitting in this price zone area. This price zone area is somewhere around 68 cents, 68.11, somewhere around there. Because this is, again, where people have their orders set. Their sell limit orders, their buy stop orders, anything like that. So that's what would bring orders into the market, flood the market with liquidity, and then that's how smart money with traders and trade the way they need to take the money away from the small guy who's been taught retail his whole life and just take the money from them. When instead you could have thought outside the box and thought, you know what, maybe I shouldn't trade this way. Maybe I should try a little bit of smart money here and there just to see what it does. And you'll probably be absolutely surprised with the results, because it changed my trading from being an absolutely negative trader to breaking even to actually being in a positive now. And I know that especially in the Forex world, which is where this idea I think primarily came from, only 90% of traders actually make money. I'm not much sure that is in the crypto space. I'm sure it's a lot higher whenever there may have been a lot of people investing in Bitcoin when nobody else was. And then this year it just came out of nowhere. Or the same thing with Ethereum. I remember when it was at $400 in like September. And next thing you know, it's what, $2,500, something like that. So I think if we do 315, then yeah. $315 I mean is the price to aim for. I don't know why. I just think $315 is the price to aim for. Probably because it's about actually I don't really know. But Yeah, look up here where 315 is. No, it's really high up there. Probably take me a little bit more than 5-minute chart to find out where it is. But anyways, my intentions, what I think is going to happen is that we'll see a break to the downside, possibly to the middle, before we finally see a rocket ship up. And then even then, we shall wait for this breaker to see what's going to happen. Could fall out by a little and then take off again. Who knows? But that's all I got for you guys in this video. It's been a little bit too long, but hey, at least it was what it was, and I got some things to explain to you, and hopefully you learned a little bit something out of it. If you did, I would like you to do something for me. Hit that subscribe button, hit that like button. That'd be greatly appreciated. It would help me show up in, the algorithm that YouTube has. It would get me more exposure. It would just help me with the channel in general. And if you have $3 a month, I do have a Patreon. You can go to my Patreon /BodiesXWix. It's only $3 a month. Or sorry, yeah, I think that sounded like 23, but I meant just $3 a month. That's all I'm asking for the basic necessities. I'll take requests on doing certain assets if you want me to. But what I'm really trying to do is start a signal service to where I can provide these signals for you in case you're a spot trader, if you're actually a futures trader, or if you're a margin trader. These are where these things will come in handy. Is knowing where the next turn in the market is just by reading it. And I have a feeling just by reading it, I can kind of tell where things are going. So hopefully, if you sign up for my Patreon, I will be giving out discounts to those who do sign up for my Patreon for my paid group that's going to be in the signals group of Patreon. I keep hearing the echo in my ear and it's like freaking me out. That's why I keep like stuttering, and I'm like, what is that noise? Well, it's just the echo of the microphone going back into my ear. What a great concept you had there, Tyler. Anyway, yeah, just $3 a month for the Patreon would help me so much with these videos, especially the subscription services that I use for this. And a lot of what I do to put into these videos isn't cheap, and it takes up quite a bit of time. So just $3 is what I'm asking for a month, and then once I get the live Telegram channel up and rolling, give you guys live feedback, live signals, things like that, then that's what I'll do, and I'll give everybody here that's on my Patreon a hefty discount. I'm thinking somewhere probably around like $40-50 a month, as to where everybody else is gonna have to pay $100 plus. But I'm gonna have to do it for a couple of months for free, just to show that I'm not a kook and can't trade. I can trade, and eventually you're gonna learn that out. I don't just spout off like smart money stuff in hindsight. I try to look at what's going on with the future as well. So again, thanks for watching. Hope everybody has a good night and has a great weekend. And thanks a lot. And always wear your pants.